Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. And it's been a long weekend, and we are exhausted. We did the webinar yesterday, and it was like there was energy. I had energy, and it was like, but then the parties began even harder. I didn't get to bed until late, and it was barbecues, and it was just yes, celebrating the end of the war to end all wars, and all the rest of them, and saluting the troops that didn't make it back to the shores. So anyway, here we go. Let's see what's going on there. You can see there is the on Chicago Quant. We see the Swiss there this morning. Just kind of quiet the last couple days there. You can see, look how tight this is on the time manifold. The nonlinear time manifold right there. You can see that it's just really tight, and it's trying to climb back into the. Let's see, it wasn't. Oh, it's in the buy still. And yes, did that do that yesterday? That's yesterday. So we're not going to trust that. We're just going to leave it as is and consider it in the buy, and kind of trapped in that malaise of weekly sell, daily buy. And then we'll see if this closes in a sell today. Then obviously the red line will come in. We just find that the 3-day holidays around here make markets kind of thin, and sometimes you just can't trust them, and you gotta let it play out for a day or two, and then it cleans itself up. And so that's the way we always end up doing that in the end. Let's see, just checking the sound. Okay, there we go. And so that's where we are at the moment with the dollar Swiss. Let's see what it looks like on J4X. I know we were looking yesterday at the Canadian and the energies right there. Let's go over to the dollar Swiss and see how that looks right there. And I believe it's probably red, with the hinky ashy. No, it's not. Interesting. It's just that shows you how much of a sideways market it is right now. We'll just, like I said, we'll let this thing grow, I guess you could say, or evolve. And I think when we go and look at, obviously, the euro, now the euro, I think it threw itself into a daily buy yesterday. Let's just go check that out on the Chicago Quant right there. Yeah, I guess that's what it did. It pushed, well, we got the volatility dots too. So it's kind of like trapped in that situation where it's telling us that it wants to be back in a buy. Let's just emphasize that there like that. There we go. And we'll just show it to you here. Right there, you can see it's got the red and the green. It's trying. It's holding up today. Normally we would be considering this the buy today, and so we probably will. In this point here is we throw the line. It's just a little bit underneath the close of yesterday, but again, we're trapped with that 3-day weekend here in the States, and that really makes it hard to take any of these things serious because the liquidity across the planet is enormously low, and that's pretty much what happens there in the end result. All right, let's see what we got here. Now, so just to inform you again, that's what we're doing. We're considering it in a buy because we're in a weekly buy, and we're going to throw the line up here like that instead of down here. Normally we would put it down here since it's the next day, but we're not really sure if that's really the close yesterday or not. It was so thin. I think I'm making myself relatively clear of what our logic is of that. And then we go over to look at the cable. Now the cable today is relatively easy. It's going down at the moment in a weekly buy, and we don't have to debate yesterday's action right there. And so we're thinking of the red line right there. We'll see if it settles out there or if it tries to turn back up again. Anything's possible this early in the day still. I know for some of you may be thinking, what do you mean early? But here in the States it's 8:35 a.m. on the East Coast. And out on the West Coast it's 5:35 a.m. So we still have a lot of traders that participate that are just getting rolling along from a long 3-day weekend. And we'll see how the close is, like we always do around here. And so there's the cable this morning. And you can see cable's been very fascinating, very strong. Every time we've gotten into a buy, it's been sideways up at least, or up. One or the other. Here it was, up. Here it was sideways, up, right here, it just kind of bounced. Let's get rid of that again. And you can see it's, I don't want to do that. I want to highlight it. I just want to show you there. So you can see this action in here was, you know, kind of sloppy, but still there, and runs a week. And then this one here puts it in the daily buy there. That was on last Thursday. And again, it's just anemic, but still sideways up. And I don't think we're going to see much of the weakness in this product. It seems like it still wants to climb. We've read some interesting things that confirm the story side of it. So, excuse me there. So we basically look at it and we think, okay, you know, it's going to be firm. You know, it should be solid, and we'll see how they play it out. At this point in time, with the height of the white line here on the weekly chart right there, it's basically saying that the weakness is only short term. That's what we're seeing at the moment. We'll watch and see. We'll see if this, all of a sudden, the white line starts to make a dive. You know, like we can show you a physical example of what I'm talking about. Something like this, where it starts to show a dive coming in, even with it rising in price, right up in here. See how it was rising here on that daily back in February, and at the same time it paused right here on the weekly and started to roll over with that. That's usually a good sign that we're coming to the end of a run. So that's how we're going to look at this. You know, as long as this is looking firm in here, we're not going to take these daily sells too serious, not thinking that it's going to collapse. Now, obviously, if you're long, you know, the best thing you can do is, you know, throw a binary on or an option or something like that. You know, protect yourselves for a possible little downturn. Nothing major there. All right. See, that is, wow, we're really flying along in 7 minutes. But that is, oh, hey, Alan, how you doing? What do we got here? The sentiment consumer indicator used much in trading. Oh, that's a question, right? Okay, so the sentiment consumer indicator used much in trading. Is that like a question like, is it used a lot? You know, Janos, the head technician for Dukascopy, and a lot of fundamentalist and, you know, indicator, you know, what's the best way to describe them? Fundamental statistical information have come to the conclusion that a lot of it is very weak and you can't really trade by it. It's very hard. So I would not lean on a sentiment indicator, consumer indicator, for more than just say a 4 or 5 minute move or a 3 minute move in the marketplace. After that, it starts to drift. It's very rare for any of the indicators anymore to have much influence ever since quantitative easing, QE. And so since the creation of QE back in 2008, it has taken the fundamentals and made them less accurate when it comes to predicting the direction of currencies and stocks and so forth. Commodities. Commodities probably the least. Currencies and stocks the more. And when it comes to the bond market, that's totally consumed by the central banks and the Federal Reserve. So sentiment, you know, using indicators like that nowadays is very dangerous. That's why the fundamentals have drifted, and the technical analysis has become the king or the queen of directional trading in a sense. So yeah, hang in there, and we do go through stuff like this, and that's a good question. It's very important for a lot of people to hear that, because let me just finish this answer with a very clear, scary point of view, and that is that a lot of managers who manage retirement funds and hedge funds and pension funds and so forth still are using fundamentals on some level. And that is kind of scary, because we do know that they are very short-lived. And there's a reason for it. And that reason is that they're incorporated. When you incorporate a fund, be it a hedge fund or a retirement fund or a pension fund or any type of incorporation of a fund has a manifesto written up, and it describes how you're going to invest as the manager. Okay, and then you go out and you get money from pension funds or retirement funds or speculative funds or hedge funds or whatever funds. You're getting money from the public. And that public has an opportunity, if you invest different than what you suggested in your incorporated manifesto. How when you incorporate, you define what you're going to do with that money. You're not just going to put something out there that says, well, I'm just going to make money. They're going to be a little bit more sophisticated than that. They're going to actually lay out strategies and ideas. And so if you drift from those strategies and ideas, you can be sued. So funds overall, be it whatever type, are incorporated. They have not changed their incorporation to say we don't trust fundamentals because of quantitative easing. Matter of fact, I don't think anybody, I don't know if there's a fund out there that says that. It's very hard to say. There are long short funds, and they're usually probably like the best of them all, in my mind, because of, depending on the manager, of course, and so forth. But that's a real wild answer to that question of sentiment and consumer indicators and so forth. It's a real jungle when it comes to understanding post 2008, and so it's a real challenge there, and hence a good part of my personal way I'm doing the webinar is because here in the States they won't talk about it. There just isn't that much discussion about it at all. I mean, almost zero, but very, very little discussion. And so they use these stats every day. They make a move every day. When you read, you see the stats. They do have a movement, but it used to last days and weeks, these indicators. Now they last minutes, and that's it. If they go 10 minutes in that direction, it's a surprise. It has to be something incredibly powerful. And at the same time, the central banks will step right up because now they are the buyer of last resort. And because they're the buyer of last resort, they step up and they start to firm it up unless there's some real calamity going on. So that's unfortunately the answer to that. And that's really scary because it doesn't make a lot of sense as far as I'm concerned. All right, I hope that answered your question. I see you said thank you, but like I've always said, sometimes there's short answers and sometimes there's long answers, but there are no stupid questions. Okay, there are no stupid questions. There are only long answers or short answers to the question itself. So, all right, now what we do is we drift over to the Turkish Lira and see what's going on with that. So Aragon did something again. Saw that yesterday on my phone in the middle of a cocktail having an adult beverage, but oh yeah, look at that. Now yesterday during our webinar, this was flirting with the daily sell. This was flirting with daily sell, but look at it today. It's back up. It never got a chance to get into the sell, and we're a little low, from the last couple days, but we're still making all-time highs in this product for the last 2 days. And you can see here we're in a weekly buy. It's very firm. And then we drift over to, I know it was liquor sales. That's what it was. I just remembered what it was that I read. It was liquor sales about Aragon. President Aragon was removing the access to liquor in Turkey, and placating the religious side of it, and he's always doing something. That's for sure. He never slows down. That's without a doubt. From prime minister to president, he's been a dominant factor in that country. All right, so that we look at the Turkish lira there, and then we look at it with the euro. And now the euro yesterday, when we saw it playing with the daily sell in the dollar, it had no interest whatsoever yesterday of doing it over there. It was staying very firm. And you can see it here. It's been in the daily buy for 3, 4, 5, now a 6th day. And we can see that 2, 4, this is going on a 5th week of a weekly buy. And this is chugging along, constantly making, like yesterday, it made another all-time high right there. And so the Turkish lira is, and not skipping a beat when it comes to its drive and tenacity for going where it's going. So, all right, let's see, where do we go from here? Let's jump over to, we usually jump to the Canadian now from there. We always have. We've jumped to the Canadian to take a look and see what the Canadian is up to. So we're going to shoot over to that. Let's see, right there. And the Canadian, let's move that over a little bit so you can see. All right, so it flirted its way. Did it really? Let's see. So yesterday, it's trying to tell us that it pushed it into a sell. We're going to take the sell here. Well, it didn't, because we had a green dot, which is, you know, stopping it from being declared a sell. Also, with the holiday, it's no reason to take it too serious at the moment. And you can see here, now it's starting to do that. And we can make this a red for it right there. We'll see how that plays out today. See if it settles down there. It looks like it might. You can see the time manifold on the weekly is turning up a little more aggressively than norm. We'll see how that plays out. But we are in that weekly sell since the 25 area, or 25 and a half area. And now we're flirting with the 120 area. So it's been an interesting sell-off in the Canadian. With that, we look at that and we think, okay, with this going down, crude oil should be very firm. So we look at that, and then we look at a couple different pairs trades that usually are trying to be an indicator of the direction of crude oil. And so here is the Euro Canadian. Where's it at? We've been looking at this now. It seems to be a pretty good indicator. Euro Canadian. Where are you? There's Euro Yen. There it is right there, Euro Canadian. And so this should be, I think how this works is it should be going up in value, I think it is. Or is it down? Let's see. When it was going down, it was making, oil was really rallying. And then when it started to go up, oil tried to correct a little bit. So it's sideways here. You can see it's very tight. Chances are, and you can see, now what's interesting is the daily there, you can see today is trying to climb up into the buy itself. And at the same time, look at the weekly. Lots of strength there. So are we starting to see a possible topping out of the oil market? I think yesterday I was saying literally the opposite. I thought that, you know, we had broken, let's go over to the oil market. We had broken, where is it, right there. And you can see today, you know, they've got oil up to 68. We thought, you know, in a daily buy from it went into a weekly buy last week, and the last 2 days it's lifted from that. It closed on Friday at, was that 66.85, and now today we see a high of 68.69, almost $2. And at the same time, let's just run back to the last of the pairs trades. That is the NASCAD. So the Loonie trade right there, and we would assume this would be trying to fight its way up. That's normally the way it represents strength in the oil market, but you can see it's showing weakness also, just the same way the Euro CAD is in some aspect, or sideways action, if nothing else. So we're gonna, you know, we're bullish on the crude oil chart itself, right here, but the pairs trades are, the Canadian is showing us the rally of this product. The other two are just kind of sideways, and that could be just lack of experience, you know, with the Euro CAD. We've followed the Euro CAD. It showed some really good indications over the last 2 months that it's a good leading indicator. But right now it's going sideways. Maybe they're just looking at it and saying, I don't know what to do. You know, so it's just going sideways at the moment. Anything's possible there. But, you know, I mean, obviously the proof in the pudding altogether is looking at the crude contract. And you can see the crude contract for the last 2 days is up $2 from that weekly buy and daily buy. So with a daily buy of, this will be the 6th day, and this is the full first week of being long Monday and Tuesday. You can see it's been a winner chicken dinner, as we say around here. All right, now we drift over to natural gas, because looking at these energies, we take a quick look at the natural gas, and natural gas is doing, no, it's gold. It's fine, natural gas. Right there, there's natural gas. Natural gas is doing something extremely odd. Let's refresh that. And that oddness is, it's going up with a daily signal, with a down signal. So you can see here, we went into the sell here, what's that? Oh, that's Friday. But we're in a weekly buy, so obviously you can't take the trade, so it just says take a profit. And then yesterday, or no, this is today, right here, you can see they've gapped it up on the July nat gas. And at the same time, you can see the histogram is minus right here, and the green line is minus right here. But with the weekly, even with it curving and starting to make that attempt to hit the top part of the nonlinear time manifold, the yellow line, that's even easier than saying nonlinear time manifold, it's hitting it, just about hitting it and trying to break it. We'll see how that goes, and you can see the same thing with the histogram bar. So, a little surprise there. We'll see if they sell natural gas down going into the end of the day, or it finds a way to get a green dot going, or it turns into a volatility signal, and this line here starts to turn up. So let's give this a refresh, just a double chance it needs a little bit more of a refresh. There. Interesting. That gap up is a tad surprising. But again, we're in a weekly buy, so we do think of the selling usually as kind of weakish, not being very strong. And then this was the winner chicken dinner right here. So what was fascinating is, I guess it was Thursday of last week, we closed the gas line 3 indicator broke down into the minus with a green dot at the same time. So it kind of confused it. And then the next day, it went into the sell on Friday. So there's seeing a little interesting divergence, I guess you could call it there, in the like in the movies, divergence. So we'll see how that plays out. But right now, weekly buy, it's a neutral for us traders here following Doc's work. All right, now, brown cow. We go over to, we go back to the currencies, and we take a look at like ruble and so forth. And there is the ruble. You see, oh, look at that, jump up. So we've been in a daily sell since back to, that May 13th. And it's been gliding along, and we've been in a weekly sell since April 30th. So it was a very mild sell-off in the sense of how far it went. But distance-wise, it was interesting. It stayed in a sell now for 3 full weeks, 5 full weeks right here, and this is the 6th week. And finally, a daily is trying to perk up. We'll see if it has the short-lived life like this right here, where we went for a long period of time when we went into this sell to lead us into the weekly sell. And see how the ruble goes with that. Now, we then go from there to the Japanese yen. The Japanese yen is doing a little flirtation with the daily sell right here today. And let's refresh that. Right there. Now, weekly is still holding up. We have 2 full weeks in a buy. There was the winner chicken dinner right there trade. And we'll see what they can do with this. It has the great potential to be a daily sell by the end of the day. We're going to throw the little red line up there just for a warning and reminder for tomorrow when we look at this again. And there we are there. Now we drift over to, let's see, from there we go to the Mexican peso. Right there. We can widen that out, and it flirted with the weekly buy last week and closed in the weekly buy after being in a weekly sell for, I think it was a few months. Let me just go back and check. So we slide over. Yeah, we went into the weekly sell back in March on the weekly close there, and you can see it was a very interesting trade, a very good trade. You had your little pops, and then would go back into a sell, a pop. And in this case here, you couldn't take that long there because, again, we were in a weekly sell. You did see the white line pierce the bottom time manifold and tried to go towards the 0 line to the plus area. But it didn't really live long. It just gave you, indication that there was some real underlying strength, and you could see it in the daily right here. And then we went back into the sell, and it found ways to go down more than go up. it just kept on, then it turned into the sideways action down in here, making new lows, 5-month lows, that type of thing. And then you can see the weekly flirted really close to it, to the zero line, and then now you can see just this week, is that it right there? Yeah. So it went into the buy on Friday, and then on Monday, no, I'm sorry, it went into the buy, so there's the buy, should be moved over one. Oh no, that's right. Went into the daily buy on the 27th, and that's the end of the week. Remember, this is a weekly chart here. So this closed on the weekly buy, and then on Friday, I guess that's that. So then on Monday right here, with the holiday, it was just about unchanged. And today it's still a little unchanged and flirting with the daily sell. And at the same time, we are now playing with the weekly sell. So this, the Mexican peso is a really tight market, and it doesn't seem to have a lot of direction, which is good. People in their indigenous countries would like to see their currency go sideways. So it doesn't, no lower volatility basically. You don't want a lot of volatility. You want the opposite. You want it to be, pretty staid, pretty quiet, not going anywhere. Makes it easier for importing and exporting, and it just cuts the inflation down, and gives an opportunity for commerce to function a little bit more successfully, that type of thing. Now from there, we drift over to the South African rand, right there. There's the South African rand, and it is trying to perk up today, whereas yesterday it did not. But look at the weekly. The weekly is pressed down dramatically. Now, just looking at that and that little pop up, we would assume that we would be seeing sideways gold to downward gold, one or the other. So what we do is we drift over to that right now on the commodity side and take a look at the metals complex. And so there's the first one, gold. And gold is not really caring. It is much higher from where it was on Friday. So we're making new highs again. And we can take a look at that. I always like to look at it in J4X. It's always a little bit better to look at it in J4X when we go out into that longer distance view. I know it's hinky-ashy and it makes it a little bit more challenging, but overall it's still kind of fun. And we'll take a look and see when we were back in this 19 area. It's been a while, I believe. See how easy it is just to scroll to take a look at it. So basically, all the way back until December, we weren't playing with this area, and maybe it'll take out these highs. And you can see the tenacity and the strength of what's going on there. So that's gold, and then we'll take a look at silver. We did see silver. I do remember that this morning when we did the charts. Silver is showing strength. The July contract here looking very firm. We talked about it last week, I believe. And I don't know if we wrote about it last week or not, but we're convinced that it's definitely lifting, and that's probably a good one we can use for Robin. If you're listening, Robin, we'll probably go after the gold chart. Matter of fact, I'm going to send that over right now to him, and it could be the beginning of some good opportunity where silver again, which seems to be the abused metal of choice, is trying to get it back into the weekly buy. Let's see, what else can we say about it? It's in a daily buy now for 5 days. You can see that right there. So we went into the daily buy right here. You can see how close it had played with the weekly. So could be the thing of choice to write about. And that's probably like the best of it all. There. And we'll just send that over to Robin at the same time. There we go. All right, now we do take a look at platinum, just to get a little flavor of the metals complex. And let's see, right, is it right there? July platinum. And you can see this is, look at the way this is sunk from the 1280 area down to the 1180 area, basically $100. While gold has been going up, they've flipped the spread. I'm not sure what that means. We called this the Yellen spread, we were very bearish on it from 1050, and we're really confused about how much weakness is in platinum at the moment. I don't know if that has something to do with industrial base, fundamentals that we have a hard time trusting, or what. But it's desperation possibly. That we've read some stories, we've talked about it here, about the central banks kind of losing control of gold, and it seems to be on a rampage. I mean, we're looking at gold now. Let's just go back to gold real quick, and that's why we thought there was weakness in silver and platinum, because they were using it as to hedge off their longs, and we are in a weekly buy now in gold since April, since the middle of April. And that is in the 17s, like 1775 area. And now we're flirting with the 1900, 5-6 weeks later. So it's at 3 weeks, 6 weeks, 7 full weeks now in a weekly buy, going on an 8th week right there. Daily wise, we are, what was that, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7. 17 days in a buy, heading for an 18th day in a buy. So obviously, they're having issues there with the metals market. Normally that thing is being held down, and they don't seem to be able to control it. And Robin has mentioned to a few people, and in our letters that we write, we're not letters, but I don't know if it's an advertisement or when we do things in Bar Chart and a few of the other places, we've talked about the idea that the central bank they're shutting down the London bullion market, in other words, the physical market is getting closed more and more. We got, hey, Middle Age, how you doing? Still long gold and silver for 8 weeks now. I said to Robin this morning, I just sent it over to you. I sent it over to him about the idea of just writing about look at the way silver's trying to get back up there again. Boy, I tell you, how did you interpret for those that are watching, Middle Age is, I think he's one of our clients too. Yeah, he's yes, of course he is. He's a client of ours too. He subscribes to the Chicago Quant, and he gets charts every day. And I'm curious to hear how he basically followed the silver. I mean, the silver, which I think is being sold solely to hedge the long gold, because they can't do anything else. In other words, they can't. They could buy puts, I guess, and sell gold. Take your choice, I guess. So you sell silver, sell platinum, and buying gold. But this right here, how tight the weekly was, and Middle Age he's a big fan of the weekly system. He keeps tight track of it. How did you interpret this flat line in there? Especially with the buy of it. We went into the sell here, and it rose in value, and then it sidewayed and went into the daily buy, and now we have it lifting the whole week of last week and coming into this week. So that must have given you a lot of confidence to not run, not take a profit, just because of how tight it played, and how the daily, as much as they tried to push it into a sell, they really had a hard time doing that. You could see how about that day there where they push it down into the sell, and that at the end of that week, look at that, how close and tight it was. Plot 1 was minus 0.01, 1 tick. Not $1, not 10 cents, 1 tick. Not even, was it 1/10 of a tick, right? Yeah. So is that right? No, it was 1 tick. 1 tick pushed it into the sell, and then on the weekly, the plot 4 was 1 tick. It was so tight that it couldn't generate a full standard deviation. That is really, our math can get incredibly molecular. I think it's the best way to describe it. I designed my mathematical formula to fight with the Higgs boson back in '77, and so I'm measuring incredible minute movements in atomic theory. So I end up aiming this system at the financial markets when they created listed options in 78, 79, I guess it was 79. I didn't really understand it at the time to aim it at it, but one thing I did do is leave physics and go right to the financial community, when they created listed options by removing the zero-sum factor. And so I applied at the American Stock Exchange, and they said, we're going to hire you, but we're not going to hire you right now. And I was like, I don't understand. And it was like, well, we have so many people in line, we have to be polite about it and just hire each person at a time, and then you'll go from there. But you have great credentials, and we will hire you over the next, anywhere from the next 8 or 9 months to a year. We're going to hire you. And I was like, okay, right. And they said, no, believe us, we're going to hire you. It's just that we have so many people coming here. It's the listed options and the zero sum. We have a lot of these rocket scientists coming in. You're in line. You'll be hired, and you'll be happy about it. And I was like, okay, sure, right. So I drifted off to do some solar and engineering for a while for the fun of it, and taking them serious because I was trying to read about options and learn how to understand the option market, because they had removed the zero sum factor by legalizing options in '76. So I don't know why I drifted off to that conversation, but end result is that yes, I know it was because I'm using my old math that I was dealing with before Higgs boson became a legitimate theory, and then obviously a Nobel Prize a few years back. So back in '77, you can see when I do my measurements using my mathematics on these indicators that I've invented. I say, where are we going here? We'll get it here and again. There it is, like there. When you can see, like here, you can see what pushed it into the cell there, minus 0.1393. So it's in between 14 cents and 13 cents. Pushed it into the cell. Same thing. So it can be incredibly something to laugh at. I mean, at least I do. Anyway, Middle Age says, when the weekly quant went positive in April, and we broke out of the inverse head and shoulders on that daily is when I bought the call option. Smart. Yeah, exactly. And see, when you use binaries and options, you're removing the margin risk. When you're especially if you do it in spreads or you do it in naked long, you know what your risk is. You know what it is the moment you put it on. You put the trade on, you know what the risk is, and you can't lose any more money than what you've already put out. That's the worst case scenario, not the best case, which is really good, when you think about it. And so when you put it on as the futures contract or the spot, then you have a margin risk. And a lot of people don't usually compensate very well with their margin risk. So what happens is you get stopped out. And how many times have you heard someone say, oh man, I put it on, I got margined out, and then it went where I thought it was going to go. I can't tell you how many times I've heard that story over and over again. So, when you're using binary option strategies or individual option strategies, it makes it a lot less of a risk of a trade. So then, like, Middle Age can get long in there, and he knows how much he's risking, and he knows the time frame of the risk and the whole bit, and he doesn't get stopped out. So you can see here a lot of times you get saber-tooth action. No, it's like a saw blade. Like here, goes into some sideways action. We get into a daily sell. Some people do something even worse. We refer to it on Wall Street as cannonballing. Anybody ever remember when you're a kid and you're jumping into a lake or a pool, and the kids jump off a dock or a diving board and they cannonball into the water? And what happens is some people actually make a mistake of cannonballing up. So what happens is as silver goes up, they buy more instead of taking profits. They actually get longer into position. So the average cost increases, not decreases. And so people cannonball, and then they get in trouble, and then they get margined out, and they give up all those profits. So people are going to think you're like, you're. I agree. The weekly is a very good signal. It really is. It's one of the best signals. Matter of fact, that's usually, how like. Let me just digress. You know how I came back to. Let's go back to the Turkish Lira, and came up with those dotted lines. Let me see. Where's it at? Let's go to the currency. That's where I got the yellow dotted lines from the weekly signal. There are more things I can interpret, and so when we had this strange action here from that, in this case I guess it was the daily. But a lot of times we will look at the weekly, and it will give us a future potential spot of value. Okay, so in other words, like an atomic particle, you're trying to figure out where it's at. Like the uncertainty principle. Where it is, but not when it's going to get there, or when it's going to get there, but it's not there. And in our case, we've kind of conquered that issue. And so we can basically say normally 8.5 out of 10 times it's going to go where we expect it to go to. And matter of fact, this is one of the very first times in my 40 some odd years using my math that it hasn't taken it already. Usually it does it where I drew this green line. Usually right there is where it would have taken out that dotted line. That's what the indication is. We're getting closer, but this particular product is one of the more stranger controlled, and you got quantitative easing, and it does interfere. But I believe it will make touching that, and it's because of the weekly indicator that's telling me where it wants to go. So anyway, thank you again, Middle Age. It's nice. Speaking of which, I left this up because I don't know, you probably saw the chart this morning already, but look at the coffee again. The ETF is taking out another high today. I left that up. I didn't even close this when I saved it. So you got coffee. Middle Age also likes to trade coffee, and so Middle Age is probably long the coffee for sure at the weekly buy number here at 39 and change. Or in the futures contract options, and you can see here it has gone up. I don't know, what's that, a 10% move? Is that a 5% move? I guess it's a 5% move since it went into the weekly buy. Coffee's gone up 5% since the weekly buy. I guess that'd be about right. Yeah, 39 to 40. What is that? Today it's at 46.70. Okay, so from 39 and change to 46.70. That's about a 5% move, isn't it? 6% move. So that's where that's at with that. Anyway, thank you again, Middle Age, for the compliment. And I did lose. They gave Higgs a Nobel Prize. At the same time, string theory uses his work now as a field theory. And so it's basically an ether. So Michelson and Morley are rolling in their graves. All right. Anyway, that's where we go from. We'll leave the physics again and go back to the trading. And let's drift over to. Let's see, where are we at now? Now I can close that too at the same time. Oh yeah, what's tags doing? Let's see what tags are doing. Is that tags today? No, tags still has not updated. Let's give it a refresh. We wrote about tags last week, about it going into the sell. That's kind of interesting, and all the grains fell into the sell. If you look at the fact check spreadsheet, you can see that over here. You can see we've got now corn, soybeans, and wheat all in weekly sells. We'll see how long that lasts. I think they're already flirting with the weekly buys as we speak. Let me close this and let's go take a look at that for the fun of it. Unless someone wants to see something. Let's see where we are. Let me just go over there. I want to open it up now because now that I mentioned it, I want to look at it myself. But I'm almost sure every one of them is starting to flirt with the weekly buy again. Here it comes. And let's see. All right, so here is. No, it's not. The July bean oil is not, but I think the December, or is it November? November beans. There's November beans. November beans are. That's right. I meant to circle that. So November beans are already going out after just one day and one confirmed week in the weekly sell. They're already flirting with the weekly buy number today. And look at the daily. It's been in a daily buy for 3 days, and it's run from the $13.50 area to almost the $14 area. It's gone up 50 cents in those 3 days. So now let's take a look at July corn. You see July corn, it's probably a front month thing. That's what we're watching over there is the front month on the fact check spreadsheet. Now let's take a look at DEC corn. DEC corn, same situation. Closes in a weekly sell last week. Got to put that in there. Thought it was in there already. Right there. And sure enough, it is flirting with a weekly buy again, like very quickly. So we're seeing the weekly swing. It can happen once in a while where they swing. They don't trend for a while. They just swing, and you get that's usually like a sign that something's coming. You know, some type of wild action type of thing. You know. And then let me save that. And what was the other one? Beans, right? Yeah, let me save that. Beans too. November beans. Let's do the file save there. Save workspace. Bingo. And then I guess the wheat. Let's take a look at wheat. The front month wheat, same situation in a weekly sell, but the daily saved you on Friday. Is that Friday? Yeah, Friday. No, Thursday. What's that doing? It's not updating. Now why is that not updating? Let's fix that. What happened there? That's July. I thought I had it fixed. I thought I saved it fixed. There we are. Yeah, so it went into the buy on Thursday, and sure enough it's there, and you can see the front months. All the front months are falling down a little bit. And then we go and look at, where is that at? We go look at DEC. No, what other week do we follow? We must follow a back month week. Where is that at? Don't we have a back month week? I thought we did. I guess not. No one's following like, I guess winter wheat is being harvested right now. So no one's really looking at a back month. I guess we'll have to put like a back month in there and take a look and see. But at the moment, do we have any insight? Is it red wheat? Red wheat. No, that's still in a sell, but the daily buy. Interesting. All right, we're gonna have to. I didn't realize no clients are following back month wheat. We just have the July wheat, nothing else. Same thing with the hogs. We've got to fix, add another hog, because back month hogs. That's all we have is we have a front month hog, June. June hogs right there. Now, what do we have? We have bean oil all the way back. And we have corn all the way back for back months, but we don't have a wheat. Let's put one in there while we're here. Unless someone wants to see something, I'll just do the research and get this done at the same time. So we go like that, activate, and then copy. And I'm not even sure which back month we should go with. Let's see, paste the copy window, and then view, paste the window. Where's it at? Right there. Paste the window. And then let's find a new wheat to put in there. Let's see. Let's see. Instrument and add. I guess December wheat. Let's go with a December wheat for the fun of it. Maybe Sep wheat. I think Sep wheat. Let's see. Oh, right here, there it is. Sep wheat. Let's try that. And Robin and I will double check them, make sure that we'll go with DEC to start off with. Add, and then let's put a Sep in there. All right, and then close, and let's try that. Let's put the Sep wheat in there and see how that looks. Wouldn't surprise me if that thing is coming through. Now, that Sep wheat could also be the new crop, but obviously not a delivery situation. So there is that. There's again for the weekly. Now that's doing that. It's not. It's still showing that. Now for curious sake, let's do this. Let's put the December wheat in there and see what that looks like. No, isn't that interesting? Still not reflecting it. That's interesting. All right. Anyway, what was a good experiment? You know, I was curious. It had my curiosity. So let's see where we're at now. I guess that's I'm going to save all this, save workspace, and then we're going to close it. Close workspace. There we are. So just corn and soybeans are in the back months are lifting up already, but not the wheat. Now wheat we find anemic at times. You know, in other words, kind of weaker. You know, less productive in some ways. Maybe it's because they use a lot of it. I don't know. What else can we look at here? Let's see. Where did we leave off? We were looking at the metals complex in silver, right? So now what we do is we go to let's see. We go to the stock indices and we look at the cryptos. Let's do that. Let's go to the cryptos. Having a problem loading in Bitcoin this morning. It refuses to go in. I'm not sure what the problem is there. There we are. But let's go take a look at. Oh, you know what? We used the stock, the Coinbase. Let's look at Coinbase. Open the stock thing again, and we'll take a look at Coinbase and see how they're acting this morning. See if they're buying them. Last I looked, I saw the cryptos being a little weak still. And not there, and let's see, because I got to read that. All right, so there is Coinbase. That's the daily, and it's kind of unchanged from last week. And, that's the daily itself. And then, did we have I guess that's it. I think we were watching an intraday on there somewhere. Where we were looking at, I know where it is. It's right here. I think we have to load that up. Right there. There it is. So, this is the intraday on Coinbase. We look at there it is right there. So they're moving down this morning. You can see it's, actually gapped up because there's Friday and that's today. So they've actually gapped that thing up in price and now moving down. We'll see if this is the beginning. It looks like it's the beginning of a sell-off here. This is a 396, I think it is. No, it's 1963. So it's 1963 on a tick bar. And so you can see there the pressure is on that. And then what else we got going on there? And so then there's the Bitcoin at. Let me go over back to the Bitcoin. Right there. And we're trying to put in that was there's Friday, and it's down again today, and we're in a weekly sell on the we're in a weekly sell right there. So the pressure is on, and I can see it down on the screen that's down, but I'm not getting a chart at the moment. I've been trying to get that's the May contract, so it expired on Thursday or Friday. I guess it was Friday it expired. And we need to put in the June contract now. So we're going to work on that, see if we can get that thing straightened out so we can get the June contract in there. And so that's where the cryptos are. And then from there we can look at the stock indices, and they're going the opposite direction altogether. So you can see here like NQs are firm, trying to get into the buy. You can see it's trying to get into the weekly buy. This is a super, so the histogram moves a little bit more independently than plot 1 and 4. That's green is plot 1, the blue is plot 4 of the 3, and then the 5 is the histogram because of the beta in this thing. Then here we just go with a 5, and you can see they're trying to get into the weekly buy, but they got into the weekly buy on Friday in the S&P 500, and you can see the strength coming into it today. And then on the Dow Jones Industrial Average, same situation. They closed it in a weekly buy on Friday, and you can see the strength coming into it today, right there. So the stock indices are finding ways to climb up versus everything else is trying to climb down. Let's see now. I guess we have to have a title for this today. Anybody have an opinion? How about Doc's weekly numbers, because we talked about them and analyzed them. I think that might be the way to go. Doc's weekly gold and silver numbers. I think that might be the best title of all. All right, does anybody else have a question or anything? And if not, we're going to basically start to shut this down. If there's any questions, we'll hold on for a few more seconds to see if anybody cares. But it's been again, with the holiday, it can be sloppy as all get out, as I say before, And so what we try to do is we try to get the true word of the markets out there. Free markets, free people. Yesterday I was thinking about that. Free markets, free people. And that is where my head is at all the time. And since quantitative easing, we have a lot less free markets. And so that makes understanding the markets and the fundamentals a whole different universe. Giannis and a few of the people around here have talked about it, made videos about it, and there's a reality to it. And you won't get it out of the U.S. news media. That's the sad part out of it all. All right, this is Doc from North America. We will catch you on tomorrow, which is Happy to Hump Day already. It's Wednesday. So happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our cyber friends. Take care, traders. Aloha.